Hello, everyone. Thank you for joining us today for our virtual event titled Tax Time Simplified Experts Do's and Don'ts. I'm your host, Betalhim Almo, or BT. I am a program lead and facilitator of virtual events for Your Ethiopian Professionals, or YEP. Today, I'm joined by Henok Kebede, who is a certified public accountant. Thank you for joining us today. I really do appreciate you taking your time to join us to discuss something so important. You know, they say you can't run away from taxes or debt. So we're going to be talking about the do's and don'ts of tax filing. Just to tell you a little bit about Henok, he is, like I said, a certified public accountant. He received his Bachelor's of Business Administration from Middle Tennessee State University. He has 20 plus years of experience in the tax industry somehow. Because you just look so young, Henok. I was genuinely surprised by that. But he focuses on tax planning, not just filing, which is a crucial component that we're going to be talking about today. And he's also the CEO and founder of HK Financial Advisory. So, welcome to our platform.
Thank you so much, Betty. Great to be here. Good evening, everyone. Thank you so much for having me. Thanks to the YEP leadership team and community. And most of all, I'm giving back to my people. So this is pretty exciting. So I'm pretty psyched to join you guys here tonight. So tonight we're going to talk about tax season smarts. Like Betty said, specifically, we'll focus on what professionals and small business owners do and what need to know about common mistakes and to make smarter decisions. So today's not going to be a technical lecture. And my goal is just clarity, helping you guys understand how the tax system works so you can make better decisions going forward. It's also going to be interactive. So I'm hoping that when we ask questions, you guys will be able to answer and interact with us so that this is meaningful and then the information sticks. So thank you.
Exactly. Glad to have you here. So before we get started, let's keep it kind of easy and fun. Tell us about yourself. How did you get into accounting to start with?
Yeah, great question.
Taxes, especially.
Yeah. So when I started in school, so before we moved to the States, we lived in Europe as well. And I was like, oh my gosh, traveling is so fun. I want to keep traveling. And it's like, okay, what is normally something that you can do that's associated with traveling? It's business. Okay, I get to college, and I was going to major in business, and then I think in one of the lecture halls or classes, they tell us the language of business is accounting. I was like, okay, so I guess I need to major in accounting. So I majored in accounting, and then finished that, and went off to work in one of the largest public firms in the world, Deloitte. So when I started my career at Deloitte, one thing I realized is that companies like Deloitte, they generally serve, the bigger corporations like making millions and billions of dollars. And because of that, these companies have access to like specific tax knowledge on how to make sure they optimize their taxes on how that works. And what I realized is there's a big gap when it comes to like, your individuals or small and mom and pop shops, like small and medium sized businesses. So when we saw that void, we were like, well, somebody needs to support them. And that's kind of how HK Financial Advisory was found, specifically to work with like, professionals, individuals, and small and medium sized businesses.
That is great to hear because, especially as I think first generation, Americans, American Ethiopians here, even second generation, let's say, right? Our families or our parents are not as comfortable asking these hard questions, and so they're not as knowledgeable, and then that kind of trickles down, and so it's a generational impact, not just on one person, but generations can be impacted like this.
1000%. I completely agree with you. And there's a lot of like misunderstanding on how the tax system works. So that, yeah, you hit the nail on the head. So I'm really psyched to talk about taxes today because we're gonna hit some of those high level points.
I'm glad to hear that. So, I guess kind of going in with what you're saying, how do we demystify this tax application process, right?
Yeah. So just so everybody can follow, there's a few points I want to make and prepared a slide for you guys. So we'll kind of go through it. That's kind of organized to kind of address some of these high level topics. And you guys will also be able to read to kind of hopefully retain it. All right. So if you're the slide, just jump right into it.
Let's do it.
Let's start demystifying this. Let me know when the slides are up and I can start jumping in.
Yep.
Okay,
Let's
green
go.
light, you guys can see it. Okay, cool. So, oops, we'll just jump right into the, oh, just want to make sure, as a disclaimer, just quick housekeeping items. So, everything here we're discussing tonight is educational. It's for educational purpose only. Like tax rules are very specific. So you have to make sure you work with a professional as it relates to you. So as a licensed CPA, I am bound to put that disclaimer in there just to make sure not, somebody doesn't jump the gun by taking this as an advice. All right, guys? Perfect. Okay. So today, I just want to make sure everybody's on the same page. We'll spend some time tonight to walk through how the tax system actually works in plain English. And then we'll cover the most common tax mistakes professionals make. And we'll talk about what changes as your income grows and the high level difference between a W-2 and a business owner. And finally, how to use this information going forward. All right. And then we'll have some time for Q&A, which I think is the traditional route whenever we have these kind of sessions. Okay. Obviously, this will be good towards W-2 professionals, side hustlers, freelancers, business owners, and anyone who expects their income to grow over the next few years. And this is not meant to tell you that you need to be a tax expert, rather, for you to just understand how the tax rules work and what you can take advantage of as that applies to you. All right. So the biggest thing I want to start with today, and I don't know if people can actually answer this, and I can see in the chat. So if anybody that's watching in the chat, if they can answer, what do you think is the single largest expense in your life? So if you were to think about your overall expenses as a human, what do you think is your largest expense that you incur as an adult, especially putting bread on your table, paying for your living expenses? I'm not sure if people are able to put that in the chat, but what do you think is your single largest expense? Are those? Do we have any responses? Food. I completely agree. Well, that is one of them anyway. What do you think is your single largest expense? Let me know, guys. I know there's more than food in this world. So somebody said rent and mortgage. I agree. Perfect. Thanks for the participation, guys. And I know there's more expenses in life. So when you really look at it, like in terms of largest expenses, taxes show up everywhere, right? When you make money, you pay income tax. When you buy something, you pay sales tax, like clothing, electronics. When you own a property, you pay what's called property tax. When you sell an asset, it could be in the stock market or even a house for a gain, you pay what we call capital gains tax. And even at death, right, like Betty mentioned earlier, there's what we call estate tax. So taxes touch almost every financial decision we make, all right? And we're, stuck at the hips when it comes to taxes. So there's just like no escaping it at this moment. So, and these are just like 5 different taxes that we normally will interact with throughout our lives. So that is probably the largest single expense that we deal with, right? Now, here's the crazy part. That is not the most expensive. Although the largest is the tax, that was not the most expensive tax. Do you want to know which is the most expensive tax? That is not even listed on your tax return. It wasn't even part of the ones I shared. Although that might be crazy to think that after income tax, capital gains tax, it's not even the most tax. So let me know if you're interested in finding out what is the most expensive tax of all. So type yes in the chat for me if you want to know, if you want this grand reveal, type yes in the chat for me. I want to see it. Otherwise, I'm keeping the secret to myself. So if you're interested in finding out what the most expensive tax of all is, type yes in the chat for me, guys. Type yes in the chat for me. Let me know you're ready to learn. If not, I'm not revealing it. I want to see some yeses in the chat. So yes, in the chat. All right, perfect. So it's what we call ignorance tax. This is essentially the lack of knowledge. And this kind of goes back to what we inherit from our parents, our forefathers, or whatever, like, the ones that were not born here per se, as first generations, right? This is what we call lack of awareness or ignorance tax. And it's not because people are careless. It's just because no one ever explains this, how the system works to us, right? Like, this is not taught in school. You were just told to, go get good grades, get a good job, make some money, and pay your fair share in taxes. Even I myself, I'm not really taught this in school. I had to kind of learn this as I went by into industry. And so the one of the biggest impacts of ignorance tax is the lack of awareness or not dealing with ignorance tax almost always leads to overpayment. And I'm talking overpayment in taxes. And again, not because people are doing anything wrong, it's because they're just operating with incomplete information, right? If you're not aware of what to do, how are you going to act? How are you going to take action to make sure you don't overpay, right? And the crazy part to me every time, like, I do some of this research, is every year billions of dollars are left unclaimed on or overpaid in taxes. And this is according to like a national taxpayer advocate agency, which is like a research center when it comes to taxes, essentially. Again, that's not because people are cheating, right? It's not because people are cheating the system. It's because the system is so complex. Like the IRS book, like guidance and some of their references they issue is described as over 70,000 pages. So who has the time to go through 70,000 pages? Like, wouldn't you rather go spend time with your friends, right? So, and again, it's billions with a B, guys, billions with a B. So, information is what's going to help you not overpay. So that's really, really important. I just want to make sure you're aware. And one of the greatest thinkers, anyway, known, is even known to have famously said that the hardest thing in the world is to understand income taxes. And honestly, I completely agree. All right. So just to kind of hone this or bring this back. So what are the consequences of ignorance tax or lack of awareness? So when it comes to ignorance tax, when people don't understand the tax system, a few things happen. They overpay in taxes unnecessarily. They miss planning opportunities. They don't know tax opportunities that exist. So we'll be talking about tax planning and how to strategize your taxes here tonight. But this is one of the impacts of not knowing how taxes work, right? And sometimes it also leads to penalties and interest that could have been avoided just because of poor guidance. All right. So tonight is going to be about avoiding all three. So we're going to jump right into it. So if you're ready to stop paying this ignorance tax, type yes in the chat for me. I want to see it. I want to see it. Type yes in the chat for me. So that's kind of something we inherited, unfortunately, Betty, to your question.
I am very glad to be avoiding more taxes to pay, especially ignorance taxes. You're highlighting it really.
Yeah.
And see, uh, other people agree.
Yeah.
So I guess our audience today is going to be composed of two primary sections, I would say, right? We have the professionals that are, the W-2 filers. And then we have, as you mentioned, the hustlers or the small business owners. Even, let's say, they have larger businesses, but they still would like to learn more about income taxes and so on. So how would you say these two are different? How would you,
Yeah.
classify these two types of incomes?
That's a great question. So yeah, let's move on to this point then. So thank you for that. So like high level view of how the tax code works for W-2 employees versus a business owner. So employees earn W-2 income, right? And then your taxes are withheld and it's sent to the government. So that means you earn money that right away taxes are withheld from your earnings and sent to the IRS. But business owners, on the other hand, so they earn like 1099 income or business income with no automatic taxes being withheld from their income. And because they have more flexibility around deductions, they determine how much taxes goes to the IRS. All right. So that's kind of like 10 feet level. Employees get tax deducted first or withheld, gets paid to IRS, and then you have money to spend. business owners, they decide essentially how much goes to IRS because they're able to reduce their taxable income. So again, this is informational only. It's not a recommendation for you to start a business per se, but you have to understand how the rules work. All right. So you know how to play and what the options are. So I'll go into a little bit of a deeper dive on how it works for business owners. So business owners often have more options because of how deductions work. So things like your home office. So like if you have a space that you work from home, your vehicle expenses, the car you drive for business, any supplies you buy for business, education, any professional licenses you have to maintain for rendering your business, and like retirement planning. All those can reduce your taxable income, meaning the income that's going to be subject to tax, right? And this all happens when it's done correctly. So this means you as a business owner gets to use lots of kinds of expenses to reduce your overall income and ultimately reducing how much taxes you pay to the IRS. All right. So the key takeaway here is that structure matters, like between employee versus a business owner. So are you an employee or are you a business owner? Then your options will be defined based on that structure. All right. And what do I mean by business deduction? So, what are business deductions? So, in simple terms, a business deduction is a write off or an expense you can use to reduce your taxable income. Again, meaning the income that will be subject to tax. But the key thing here is those deductions or expenses have to be ordinary and necessary for your business. And that's straight from the IRS code. All right. Because because something that's business related doesn't automatically make it deductible, right? Context and documentation will matter. What do I mean by that? So, like, let's say you have a restaurant business, and as a restaurant business, you buy things like plates and spoons and tables and chairs and silverware, etc. That would be an ordinary and necessary expense for that restaurant business to conduct, right? To conduct business. But if you tell me, like, as a restaurant business, I'm out there buying 18-wheeler trucks that's mainly used for like logistics, that might not be acceptable as ordinary and necessary, right? Like you're in the restaurant business, you're not in the trucking business or having to go buy an 18-wheeler for no reason, right? So that's how deductions work. That's why IRS says it has to be ordinary and necessary for you to be able to deduct it. All right. Next, let's look at an example to just kind of hone in on this point. So in this example, we have a W-2 employee and a business owner. They both make about $4,000. But the taxation or how the taxes work are completely different. And it depends on your structure and timing and documentation, et cetera, right? But for simple terms, so the employee makes $4,000, and let's say they're at the 25% tax rate. And the government will automatically take $1,000. That's $4,000 times 25%. Then the remaining $3,000 will be the employee will use for paying their living expenses. So like the rent, the meals, the car, travel, whatever. So that $3,000 after taxes being paid will be used towards paying your living expenses. Now, a business owner, on the other hand, will be able to deduct a portion of these expenses before paying taxes, right? So in this example, you can deduct things like rent, meals, your travel, et cetera, as a business expense, which will reduce your taxable income. Again, the income that will be subject to taxes. So the business will make this $4,000 income. It gets reduced by these expenses or deductions, leaving it like $2,800 in this example. And then the government will take their portion from that remaining $2,800. So that means using the same tax rate of 25%, this person will be subject to paying $706. So that means the business owner gets to save $294 or $3,000 annually. The employee paid $1,000. The business owner paid $706 because they get to reduce the income that is subject to taxes. All right. Again, I'm hoping this makes sense to you guys. Again, I'm not pushing for you guys to go open businesses, but that's just the distinction of business owners versus an employee and how taxes work for those. All right. So let's do a quick polling question, and then Betty can take us to the next one. So let me know how confident you are that you're paying the right amount of tax. So let me know in the chat. One, if you're very confident, you know you're confidently paying the right amount of tax. Two, somewhat confident, and then three, not confident at all. So, and I promise you, I'm not trying to shame anyone here. It's just to gauge the room to see if this information is sticking. So let me know. Type 1, 2, or 3 in the chat for me. So let me know if this information is making sense. Let me know if you think you're somewhat confident. Somewhat confident. That's good. It's like multiple choice where you have ABC. Always choose the middle. So somewhat confident. B. So yeah, okay, all right, good. I mean, I'm glad to see that, and that's okay. Again, this is not confident at all, and I don't blame you because this is not taught in school. You kind of know this as an adult as you grow up, and I really wish they actually sat down and taught this in school to people because again, taxes we're like stuck at the hips with them. So, Betty, where would you say 1, 2, or 3?
I'm always crossing my fingers, so not confident at all.
That's okay. That's okay because this is not your field, right?
Exactly. And I am very excited to get to learn more about this just because of that, reason.
Yeah.
But I found that with that you breaking down these expenses so interesting, right? Because I myself, I'm just a professional. I get my W-2s. I go ahead and use these tax filing apps, whether it's TurboTax or and so on. And what I'm always wondering is, am I actually optimizing my deductions, right? Because as you're saying, if you have a business, you have the right receipt, and the expenses actually qualify, you're technically saving a lot of money there, right? But not as professionals. We don't save as much. I feel like most of our pay just ends up going to taxes. So here, I guess, if we can just stop and say, what are ways you can optimize these deductions, especially for the professionals?
Yeah. So that's a great question. It's gonna be different from professionals versus business owners. Professionals, if you're W-2 limited only, it is gonna depend one where you are in the income tax bracket because some options do open up for you depending on where you are in the income tax bracket, and we'll jump that into that a little bit later as well.
Mhm.
So things like maximizing your retirement accounts, your health savings account, and then IRA depending on your income. Those three things are going to be key. But again, it kind of falls into where you are in the income tax bracket. When you're a business owner, like you just saw in the example, the door kind of just opens wide, right? So we'll go through specific examples, and then we can actually like jump into what filing versus planning looks like then, because that helps people kind of plan for taxes. Why don't we do that?
Exactly. Let's do it.
We're gonna increase your confidence at least by the end of this class. All right, guys. So we want to make sure we increase some confidence. Okay. So all right. So next thing I'd like to discuss is the difference between tax filing and then tax planning. And this is a really important distinction because tax filing looks backwards. Okay, it's compliance. And this is the season we're in right now. We're in the tax filing season, so generally January to April. Normally, that's when we file our tax returns. Again, this looks backwards from what happened in the prior year. So when you file your taxes today, you're looking at what happened in 2025, how much income you made in 2025, what type of transactions happened in your life that impacts your taxes. You got married, you had kids, you bought a house, etc., etc. It looks backwards what happened in prior years and reports that information to IRS and all the different tax offices. Tax planning, or what we call tax strategy or tax planning, looks forward, right? Looks onwards. It involves decisions, it involves strategies and plans for your taxes so you're not surprised at tax time. All right. And this is something that happens year round, not just something you do during tax filing time. You plan for taxes year round. You're a tax professional. So, like with our clients at HK Financial Advisory, we engage with our clients at least 4 times a year. So, like every quarter, right? We engage with them quarterly. So, that's normally about 4 times within the year because we'll need to plan if there's any significant change in their income that can impact their taxes, like your largest bill, right? So we plan for it because unless if we don't engage throughout the year, I'm not gonna know what you need to do if you don't kind of come and check in with me or we don't check in with each other, right? When you come to me at tax filing season, the calendar already closed. There's not much I could do for you for 2025 or much I can advise you for. All right. So tax filing happens once a year, which is this season, and tax planning happens year round. So that's the distinction. All right. Again, filing is compliance, but tax planning is strategy because it looks at planning and forward looking. So here's one of the things I want to hone in on because we got a lot of professionals. Like the biggest mistakes I see a lot of people, even in my field, when they're in corporate or in the professional field, the mistakes they make. So first one being is confusing refunds with winning or confusing refunds as wins. It sounds great. You're getting a good payday or a good deposit into your account. But what that really means is because IRS, you're getting a refund because IRS withheld your money more than they should have. They took more than they should have from you throughout the year. And they just stored it in their vaults while you could have used that money and put it in your savings in a high yield savings or invested it in the stock market and got some returns or even towards a rental property or even a house like you wanted to buy, right? That's what a refund means. So a refund means the IRS took more than they should throughout the year. I mean, there's some nuances, but that's what generally it is when you get a refund. And they withheld it and they were like, oops, we took more, and they issue you a refund. That is one of the biggest mistakes I see professionals make because that's something they can plan for it to control. The other one I see that professionals make, mistakes professionals make is when professionals complete the withholding form. So the W-4 that you would complete at your employer, right? This is something you complete when you start a job or if you need to change like deductions, you got married or something you need to update. Some over withhold, meaning they tell the IRS to take more than they should. Some under withhold, meaning they get the IRS to take less than what they should. So the key here is you want to try to get to a balance or to a net, but you have to make sure you do it with a real plan. So, for example, if we knew you were going to get married, we could have suggested a different withholding, or you can even update it after you got married. Or if you weren't, we would have suggested a different withholding, right? They don't need to take more than they should. And this is something you can control as a professional when you fill out the W-2 form, all right? So I just want to make sure people understand W-2 form, you can engage with your tax advisor to say, hey, this is my situation. What do you think I should fill out, right? And the other one is that I normally see is missing credits or pre-tax opportunities. So when you're with an employer, they usually give you like retirement, like a 401k, or if you're in hospital space, like 403b or non-for-profit space, max that out because that is pre-tax money, meaning that's money that's not taxed going into your retirement account. All right. You don't need that to come to you only to go ahead and spend it on whatever you're going to buy and then pay sales tax and pay capital gains tax and stuff like that. You can at least shelter some good amount of money into a pre-tax into a pre-tax account through like your retirement accounts that your employer offers. Another good one is HSAs or health savings account. So if you have a high deductible health insurance, you have the opportunity to get what's called health savings account. A health savings account is a pre-tax amount, meaning you get a deduction from the income. Like you get to save more money and it doesn't go to IRS. It's not taxed. So those two things I think you guys can like run with. And the good thing is actually, if you already have a retirement account today, you can still contribute and max it out up until tax filing time for 2025. Let me repeat that. for 2025, you can still contribute to a retirement account. You just have to make sure your the company that manages your retirement account actually allows that. But in terms of tax for as it relates to taxes, you can contribute it and get that benefit. All right. And you can do the same thing with HSAs as well. It's just that if you didn't have a high deductible account or a high deductible health insurance, the plan sponsor will have to determine if you can or not. So you just have to talk to them. But again, you don't have to wait until March or April to do it. You can do that today to maximize your tax savings. So the point I'm trying to make is do not wait until March or April to think about taxes. You want to make sure you address your largest tax expense. So don't defer it until tax filing time because it impacts you all year round. All right, guys. It looks like the Prezzo went out. Okay. Oh, there we go. Okay. Perfect. So I hope that makes sense on how refund works. Again, the next slide is just demystifying again what a refund is. Again, like I for sure know with our families, whenever we see refunds, it's excitement time, and that's something we inherit. But the truth of the matter is a refund, especially for professionals, totally means that the IRS took more than they should, which is money you could have used to invest, to do whatever you need to do in life, get a high yield savings account and get more return. Because when IRS sends you the money has already like been devalued with inflation, right? And they're like, oops, there you go. So it just means that we overpaid into the tax system, and then the IRS is just returning that. So the real goal should always be paying the least amount legally that's required, and not being a bank to the IRS. Like we don't need to lend them money. They already have a whole vault in there. And just one other point I want to make is that again the tax system treats someone making like $60,000 very differently from someone making 120 or more. And what I mean by that is because based on your income threshold, like some credits and some deductions phase out, you won't be able to take advantage of those. So some deductions disappear. Like if you are above $150,000, you cannot contribute to a traditional IRA, which is an individual retirement account. And so you won't be able to get the deductions in your taxes. But if you make less than 150 filing a single, you can actually get that deduction. Meaning, if you made 150 on the dot, you can put up to $7,000. That means the money you're going to pay taxes on is 150 minus $7,000. So please be aware as you start seeing changes within your income, because the tax results matter. Which actually is a good segue to my next question. Do you expect your income to increase next year, the year after, or in 2-3 years? Because this is something you want to watch out for. It will impact your deductions and credits. So let me know in the chat if you expect your income to increase within the next year or the year after, or if you're not sure, yes, no. And if you answer yes, I'm asking for coffee. So that means you're about to make more money. But let me know in the chat if you expect your income to increase next year, if you're not sure, or no, if you don't expect it to increase. And that's okay too. No judgment here, purely just to gauge the crowd. Where's yours, Betty? Do you expect yours to increase? You're going to be taking advantage of some of this?
I mean, hopefully, yes. Especially with the inflation rates, I'm definitely counting on that.
Awesome.
We get absolutelys. Thank you.
You have to. Again, this is money like we work hard for, but then, it kind of just goes to the IRS and just gets parked. And then, some deductions we won't take. We may not have the benefit of it, but other doors open, by the way. So when your income increases, although you get phased out, there are some what you can kind of call like backdoor ways, totally legal, by the way. It's just nobody teaches it out here. Totally legal that you can take advantage of. So that's why it's important to kind of think about it all year round instead of just when tax filing comes. And again, this is not taught in school, and our families, that they love us to death, but nobody even shared this information with them. They essentially said, oh, come to this country, get a good opportunity, go work, buy a house. But the single largest expense in our lives, nobody even teaches us how to manage it besides paying it. and getting a refund.
Which is at least, I mean, a great advice to give. But definitely, I think if I've learned anything from the session, it's just I've been doing everything wrong, honestly. And because as a professional myself, really, for example, last year I was able to get, a large refund, which I celebrated very, very well,
So
assuming I have, gained the system somehow, figured out a way. But no, I lost apparently. So, so it's definitely great to know. And if I can just summarize, because I feel like we need to really, take this as a takeaway message, is that we seem to be making 4 or 5 major mistakes as professionals. Like you said, the first one is just assuming that your refunds meaning that are winning, or as you've put it. So technically, that's not true. It's potentially money you've lost, throughout the year that could have been put into a high yield savings account, as you mentioned, or really invested into the stock market, which is something we have previously talked about on this virtual sessions as well.
okay.
And then the other one you said is withholding without a plan. Again, I think we are kind of guessing what the appropriate number should be instead of planning ahead. So I am so glad you've brought up the whole concept of, you know, um, planning versus, filing your taxes, which that's the only time we're thinking about taxes, right? This January to April. And that's why we wanted to start this conversation early on in January, is because we're thinking about filing. But now, besides that, I think we've introduced a new concept to our audience, which is planning for your taxes. So now I'm going to have to sit down and really figure out what I want to do in 2026. So
Yeah,
that, in 2027, I am getting the most optimized amount.
very good. I'm so
And
glad to hear that. All right.
yeah, and
Like some
also,
tips are being dropped. Let us know in the chat if you're finding this valuable. Drop a yes, yes. I'm asking for 2 yeses. Drop a yes in the chat, guys. Awesome.
I'm really enjoying this engagement. Thank you, Magnus.
Yeah, it should be. I 1000% agree. Definitely should be part of a goal. Yep, 1000%. 1000%. And like I said, it impacts us at every step of our lives. 1000%. Like stuck at the hips.
Yeah. So, I mean, this kind of brings us to my next question, actually, because as I said before, I have been using these tax filing platforms, assuming that I'm saving money, right? Instead of going to a professional, I can figure it out. I'm a well-educated person, but I just assume I could read and figure stuff out. But really, now you are teaching us this new way of really looking at your finances, which is to plan ahead. So, what, as a tax professional, what would you say is really the benefits with working with tax professionals, and what are really the easiest way or the best ways of finding even these professionals to work with?
No, that's an amazing question. Obviously, you want to do your homework when you work with someone, right? You want to see their credentials. Like if you were about to go pick a physician for a specific issue, you kind of want to read about them, kind of understand their bio, kind of ask them questions that are like probing, right? So those are the type of things you want to do to filter that person. Because again, if you go to H&R Block, they just file taxes. But folks like that are CPAs, and I will put this disclaimer out there: not all CPAs are created equal, but folks that are CPAs, they generally are required to have a higher level of understanding of how the tax code works.
Mm.
There is a difference between a tax preparer and a tax planner, so to speak. So a tax preparer is the one that just puts your information in there and then does the return for you. And then a tax planner is somebody that will plan for you, right? So, like, do you have experience in tax planning? Are you a tax strategist? Are you going to help me create strategies? So, ask those questions, what kind of credentials they have, and look if they have any reviews. Like, so for example, with our company, we have reviews all over the place, and these are like real people, right? So those are the type of things I would do to kind of filter out the tax professional to work with. But if your information is kind of straightforward, like you're just kind of starting out, you may not need that kind of like expertise, but it's always good to get one from a tax professional, right? Like for example, we have a surprise for you guys at the end, so where you might be able to take advantage of getting some personal time. But I'll leave that till the end. But so those would be the things I would look for.
Okay. I'm glad to hear that. And assuming that you've decided to continue working or applying for taxes or even planning on your own, then walk us through what the do's and don'ts are for both
Yeah, perfect.
W-2s and
Nadi, if we can get back to the screens. All right, cool. So perfect, perfect. So can you guys see the screen, Yene?
yeah.
Okay, perfect. So let's quickly talk about the do's and don'ts for W-2s and business owners. All right. The biggest mistake that is assuming taxes, like somebody just said, is a set it and forget it. That's not it, right? It's something that's got to be encompassed part of your overall goal, okay? Because again, your income changes, your benefits change, your life changes. And when that happens, there's a bunch of additional paperwork sometimes you got to fill out. Like if you have a kid, you got to put them on your insurance. If you got married, you got to change your withholding. So do not assume it's set it and forget it. It's something that you want to look into throughout the year. So that's something I would highly, highly advise W2 professionals. And best practice, like I said earlier, review your withholdings. All right. Always review your withholdings and then maximize your pre tax options like your 401k benefits, your HSAs, because these are pre tax money. This is money before it touches the IRS, before it goes to taxes. So if it can be put into your retirement, why not? Why do you want to send it to IRS and then start doing financial planning where you have the option for it to go before it touches taxes? So make sure you max out your 401ks, 403bs. You have the option to get an HSA, because again, that's a tax deduction. You can invest it, it grows tax free. Okay, and you can use it for anything related medical. And plan ahead. Again, trust me, it will make a real difference. All right. So those are the major do's and don'ts I want to share with W2 folks. And then for my business owners and side hustlers, structure and documentation are going to be everything for you guys. Okay. This is very important because when it comes to the tax system, tax code for business owners, even for individuals, it's very fact and documentation specific. Okay. And what works for somebody is not going to work for another person. Just like I gave an example earlier where the restaurant business can go buy X, Y, and Z, like the plates and stuff, does not need to go buy an 18 wheeler. So it's going to be very fact specific, specific to you. All right. So structure and documentation is going to be everything for you guys. That's very important. And please do not mix personal accounts with business accounts. Completely keep that separate. Retain your records. And then nowadays, we have a gazillion tools and apps for you to maintain your receipts and like electronically, in the cloud or whatever. So keep personal and business completely separate and make sure you keep proper documentation of your records. All right. And, please be careful copying advice from anyone online without the proper context because some of these reels that are like 30, 40 seconds, people just look at them and be like, oh, it applies to me. And they go run with it. And then you just create risk. Okay. So that's what I would say to my business owners. Okay. And then like lastly, just kind of bringing all this together. Smart tax planning is not about loopholes. All right. It's about proactive decisions that understand your timing, understand your options specific to you, and then reviewing things before year end, before the year is done, not after a year. Okay. So simply put, tax filing, again, is looking at history. Tax planning is something that looks forward and it plans before the year is done for you. And here's a quick like framework for you guys to think about when it comes to taxes. So by April, you should have filed your taxes. That's like historical looking. By December, though, you should have already done your planning for tax savings and maximizing like maybe your retirement accounts, etc. Because once you cross into next year, like into January of the following year, it's a little too late. There are some exceptions, like I said, the retirement account, but generally it's a little too late. So by April, you should have filed your taxes. By December, should already be start. You should have already like set your plan in place. So unfortunately, most people focus on April, and that's not your fault. That's just how the information is disseminated, and that's why you see nothing change. So let me know if what we discussed here makes sense to you guys. So based on everything we discussed, would it be helpful to see how a tax plan applies to you guys. So let me know in the chat if you're like, nah, I don't need a tax plan, but by everything we discussed here, sounds to me at least, Betty, you're ready for a tax plan, right?
Yes, I
So
am.
let me know in the chat if that makes sense for you guys. So based on everything we discussed, type yes. If you do, type maybe. It's like, not right now. It's like, okay, let's keep paying more. All right.
Enthusiasm.
So all right, I love it. I better see some more yeses in there. After all this talking and exchange that we did, I better see some more yeses. So two quick things I want to do before we go into Q&A, if that's okay, Betty, or unless you want to drop something.
No, please go ahead.
All right. So first, we've put together a tax savings guide that breaks down how tax concepts work in a practical way. So if you're on the computer or however, you can scan this QR code and you can download the ebook completely free. And I'll also actually drop the link in the chat for you guys so that you guys can get it. This normally is something we actually sell for like $47, but for my people, our Ethio professionals, you guys can have it completely complimentary. So even if you never get to talk again, you at least have this. This should be definitely helpful, and it's intended to be like very easy to understand in plain English. All right. So I'm not sure if people are able to see the link I dropped, but you can use the link I dropped, and maybe Nardos could share it. Second um, gift we have is a free call. So if you guys want quickly to schedule a call with us to see where you are with your situation, how you need to optimize your taxes, there's a free call for you guys, completely complimentary again. I think it's about generally 20-30 minute call. And also, I'll be dropping that link where you can schedule your call and you guys can disseminate it there. Again, no obligation at all. If it makes sense for you, we'll discuss next steps. And it's all intended to make sure we add value into our community, into our people, because nobody teaches this. So at least at the end of the day, you'll walk away with clarity. All right. That's it for me for all my gifts on this, what is it, Thursday night? Yeah.
Mhm. I feel like that was a lot of gifts.
Yeah,
Just
appreciate it.
knowledge on its own was enough.
Something for the community.
Exactly. No, it's very fascinating because, like I said, I keep saying that, but these two main differences between filing and planning are
Yes.
something I'm really taking away from this. As you said, making sure to file on time, of course, is very important. But now, as part of my even new year planning, as we are always planning, New Year resolutions and so on, now tax planning is going to be part of my plans.
One,
In December. So yeah, no, I think this was very helpful for me as a professional. I understood a lot. I think there's a lot to take away from this. Before we go, just one last question for you I have would be any updates that we should be aware of, right? Before, especially those that have previously filed on their own, is there something we should know for the tax year 2026, meaning the 2025 filing year? Some mention, there's some tax amendments, especially as part of the one big beautiful bill, and so just some takeaways for our
yeah.
year. Yeah.
No, that's actually a great question. So, as you guys have heard, what they call the One Big Beautiful Bill, or OBB, was recently passed, which changed a lot of tax codes. And this was passed like in July of 2025. So there's a few changes that came in play specifically that applies to a lot of people. So, for example, if you had a kid in 2025, you get an investment account funded by the government starting with $1,000. So everybody should take advantage of that. Whichever political arena you come from, it does not matter. That's $1,000 that the government is giving away, investment towards your kid that you had in 2025. All right, guys. So let's make sure we take advantage of that. So that's something key. Um, Another one is if you're in your industry, if you receive tips, if you do overtime, there are deductions of there's a certain amount that's not taxable anymore. So if you are overtime, anything up to $12,500 is not taxable. And then if you do overtime, which one did I say? Yeah, if you do overtime, it's $25,000. So there is a deduction or reduction now if in your position, if you do overtime, or if you normally work on tips. Sorry, tips is 12,500. If you do overtime, it's 25,000. So if you normally get tips and if you normally get overtime, now you can actually reduce that. So I think that will impact you guys if you're in that industry. The other one, major ones I can think about is for business owners. So if we have any business owners here, the tax code generally favors business owners. That's not me. That's just by design. You can, without getting too technical, if you buy a car for the business, let's say you spend $100,000 or $50,000, you can use that as a write-off in year one. So you could take, let's say your business made $100,000 and you bought a car for $80,000. That means your tax is only going to be on the $20,000. All right. So that's a deduction that they introduced and made it permanent. It was phasing out in the past years and like the percentage was decreasing. Now it's like 100%. So you could take off that 100% cost of the car if it's qualified to write that off. Another one that's going to be relevant. If I have any homeowners in here, the SALT deduction, which is the state and local tax deduction, it used to be $10,000. Now it's up to $40,000. Includes your mortgage interest, your real estate tax, and all your state and income tax combined. That means the ceiling raised. So if it goes up to $40,000, that means you pay taxes after the $40,000. There's a lot that's coming to mind, but am I going too fast or is that making sense?
No, that actually makes sense.
Okay, all right, cool. The other one I want to mention, so we talked about the SALT cap, the overtime pay, the kids account, and the business owner deduction. I think that's the major ones. Those are the major ones that passed last July. Yeah, those would be the major ones.
Okay, yeah. Thank you for giving us these updates. Honestly, that was very useful because, especially as you said, it doesn't matter which political side you take on. Free money is free money, right?
Yeah, that $1,000. If we had a kid last year, that's
Yeah,
definitely in that account. So towards their future. So like you can't gamble with that.
exactly, definitely. So, and also, even as a homeowner, that's actually a great thing to know as well.
Hmm.
So, I feel like that was very useful. What I want to do is actually give our audience just a couple of minutes
Yeah, let's
to
go.
raise any questions if they have them. So Nardos is going to be monitoring the chats. If you have any questions, really, this is your time to raise them. But in the
Yeah.
meantime, I see that you have a couple of platforms that you would like to discuss, possibly.
Yeah. It's just, we share a lot when it comes to taxes on different platforms or YouTube, Instagram, TikTok, LinkedIn, the whole nine yards. So you guys just take note of that. Reach out directly. Sometimes I don't check, the team checks the DMs too. So like if I don't respond, please, please don't take offense. But we put out a lot of content, so it's going to be helpful. We actually do lives on TikTok too. So I don't know if anybody's on TikTok. We do weekly lives on TikTok, like a 30-minute live, sometimes on Instagram. But yeah, we post short form, long form. And we're also on LinkedIn. So follow those platforms. If you have any questions, reach out. Let me know what you thought about this session. Let me know if you want Betty to do more of these things, updates, all that stuff. So just let me know. Yeah. So these are the platforms you guys can follow us. Just reach out if you have any questions. And then obviously open the floor to you guys if you have any questions while I'm still here. I see some thank yous. You're very welcome, guys.
Yes, it seems like you have given some really useful nuggets to our audiences, including me. Really, it's always wonderful for me to learn new things. So that's secretly why I do these sessions.
And
Personally,
I'm here for it, especially for my people. That's dope. So the link, you guys can disseminate it amongst the organization,
hmm
and they'll be able to download it like completely free, the ebook. And that'll also help us generate more information that we put out, like you'll get to their emails and stuff like that. So
Yes.
yeah, book a call if you have any questions. More than happy to spend some time with you guys and answer any questions. We are completely remote, so
Hmm.
not required to drive anywhere. Although Nardos was poking me earlier about the distance, so I'll leave it at that.
If
Thank
you
you.
don't have to drive, you can live
Yeah,
anywhere.
it's all virtual. Yeah.
Exactly. So it doesn't seem like we have questions, but one thing I do want to say that is this recording is going to be posted on all of our platforms. So you would be able to, rewatch this, um, refocus on sections that you find very useful. We're also going to be posting the links as well so that it makes it very accessible. In addition, any of these platforms that you are going to be on will be shared as well so that people can get a hold of you as they need to. And before we goes out, really, I just want to say thank you very much for taking your time. Oh, it seems like we have one question.
Oh yeah, let's go.
Yeah.
CPA licensing state specific, or can you work? Oh, I'm nationwide. Yeah, CPA is not state specific, so I'm nationwide. So I can serve anybody nationwide. So great question.
Hmm. Thank you, Hannah. Yes, that's a great question. I think most of our audience is most likely going to be from the DMV, but Yep is accessible all around the US. So hopefully you'll reach out to Henok to work with his team as well. Thank you so much for staying engaged. And again, thank you very much, Henok, for spending this time with us. I've learned a lot. I'm sure our audiences have. It's all about knowledge exchange. We're trying to change these patterns and share, the knowledge as we have it, and change these stories from one generation to the next. So I really appreciate you taking your time to do this. Anything you'd like to say, I want to give you the opportunity to do so now.
Yeah, no, thank you so much for having me. I love doing this type of sessions because it's educational and I love it. And one, you get to see like the feedback and then like the aha eye-opening moments. So that's kind of exciting to me. I love it. Thank you again for having me, guys. I'm sure we'll interact more down the road. So if I can be of any help, especially from my people, I'm more than happy to jump the bridge. So appreciate you guys having me, and I hope the session was informational. If you have any questions, reach out on any of the platforms or book your session and at least get some one-on-one time with us.
Definitely. And I hope the audience takes the opportunity to use those links that you've provided. I'm definitely going to use that one free call.
Let's go.
Oh, yes. Definitely. Thank you so much for being here. If the audience also has additional questions, we can bring back Henok to answer these additional questions. Because as we said, it's not just about filing. We're going to be thinking about these tax codes and withholdings and everything throughout the year. So as we're planning, if you have these questions, go ahead, reach out to us, and then we will bring him back.
Sounds good.
Okay,
It was a
sounds
pleasure talking to you guys. Now,
definitely.
now off to go and get some dinner.
Same here. Have a great night again. Thank you for joining us.
You're welcome. Bye bye.
Bye.